Welcome back. Joining us on the show now is Ajay Kedia from Kedia Advisory. Ajay, hi, good to have you. And it seems like that March has opened on a positive note, not what Feb did to us or to the bulls in the commodity markets. I'll start with the crude oil prices itself. And while we are looking at rupee as a calculation as well, but at $84 a barrel, with the markets anticipating that Chinese demand will come back, Russia will cut output, and the second half of this year perhaps could be looking at further tightness in markets. What would your be near-term and a longer-term strategy for crude oil prices?
Very good one. Definitely, if you see the fundamentals are now building up for crude oil prices, as we know already, China would be the trump card because after the COVID restriction has been totally removed, all are expecting that good demand or good import demand would be there from the China. In fact, the numbers what we have seen in yesterday clearly shows that manufacturing activity is now picking up in China. So one side, good support has been there from the consumption side, whereas on the other side, Russia would be more important because they have already cleared their ideas. From March onward, they will be cutting down the production by around 5 lakh million barrel. That will again add some support to the market. Currently, prices are very near to $85, and we expect for a whole March month, prices is going to be on a positive side where we can see prices moving towards closer to $89 in international for Brent, and WTI can come up towards 80 to 83. Whereas on domestic side, we have continuously seen rupee has been now wandering near to 82, 50 to 83 level, which is giving some support on MCX crude oil also. Since last 15-20 days, prices are moving in a broader range of, let's say, 6,000 to 6,500. For March month, looking to all fundamental news, we expect prices can easily test 6,700 level on MCX. Whereas on higher side, there could be some little bit cap from the US side because we have already seen inventories are building up. And secondly, US is trying to keep the prices at lower level. So some kind of profit booking on high level could be possible anyhow, but for the March month, we are expecting 89 for Brent to be testing, and on domestic side, 67, 67.50 could be the level we can easily see.
All right, so another $5 of a jump up in case of crude oil prices for the month of March seems to be on cards. Ajay, another question on metals really, because a very smart rebound is what we witnessed here as well. Here also the China reopening, expectations of further stimulus measures going forward is the cue really, but it is all going to be about the non-farm payroll data that gets released tomorrow. What are you looking forward from there? And within metals, do you have a favorite strategy, standout strategy though?
The data point is going to be very much important because already we have seen dollar index has shown a very good rally up from 150 to almost 105. But since last couple of days, we have seen prices, dollar index is not at all holding 105 level. Non-farm payroll data is going to be very much important because last time also we have seen data was been very much important. Today, even unemployment claims is showing a little bit reached up towards 196 level. So overall, we expect base metal is going to be slightly concerning at this level because some production has been resumed from Indonesia that can create some pressure for copper. Already we have seen prices tested around 785 last week. So as of now, we expect prices would be a little bit trading in a range ahead of this non-farm payroll data. But overall, looking to the consumption and Chinese data, we expect buy on drop should be the strategy for all base metal. Coming on individual commodity, talking about copper, pullback towards 760, 762 would be the good level to re-enter in copper, targeting at least 785, 790, where if it is breaching that level, then definitely a rally towards 820 could be possible looking to the demand. Whereas in case of zinc, there is a smart recovery from 262 level to almost trading near to 275 level. So we expect prices can go up towards 280, 284. And last would be the aluminium, where prices are thoroughly holding 210 level mark. Looking to the demand is improving. We can see prices moving toward 218 level in next, let's say, 1 week period. So overall in base metal, after this non-farm payroll data and event for this week, we can see a good buying from lower level would be there in base metal.
All right. And Ajay, what's your sense also on steel? Because we've seen strong demand expectations coming in for this one. Steel seems to be looking at some support now in the Indian markets and the international markets as well. Trading in the positive for the month of Jan, Feb and March has started positive as well.
Yeah, on domestic side, we have seen steel prices as consolidating now, but has been very good support in the area of around 47,000. We have seen Chinese steel mills are expecting inventories are be slightly lower and production need to be resumed once again. So there will be a good demand for steel from China. Even if we talk about the output, which has been around 1 billion tons for 2022, and it is expected to show us some little bit fall in 23 also, which has been going to be supportive. So one side, recovery in economy will definitely support steel prices. On domestic side, on NCDX, we can see prices moving closer to 50,000, 50,500 as domestic demand should improve.
Okay, thanks a lot for that. And thanks, Manisha, as well, for joining us and giving us a quick update on what's happening in the commodity market. For the equity markets, there's no real recovery. But one of the stocks of the moment is Titagarh Wagon. So just pick up that stock on your radar now. It's up almost 180% in the last 12 months. It's having a decent run today, up almost 8% odd. As we know, the 200 Vande Bharat train set orders, the Titagarh Wagons and BHEL, that consortium, has emerged as one of the lowest bidders. So we'll find out more in terms of what the exact order win is, what kind of growth does it mean for the company, etc. All of that on the other side. Along with Titagarh Wagons, you also have RVNL, which has emerged as the L1 bidder. So let's see what that stock is doing right now. It had a great run through the course of the day and now holding up with gains. So we'll take this conversation on the other side of the break with the management of Titagarh Wagons. Do stay tuned in. We're coming up with Umesh Chaudhary, the MD and CEO of the company, in just a while.